Hello guys, so today we are going to discuss how to use Fibonacci tools that you have available in your trading platform. So let's run quickly through the basics at first. Fibonacci was an Italian mathematician who introduced a sequence of numbers that bears his name. The Fibonacci sequence is a series of numbers where each number is the sum of two preceding numbers. This sequence appears in many natural phenomena, such as the growth patterns of plants and the breeding habits of rabbits. And the Fibonacci sequence is important in mathematics and has many applications in different fields, including computer science, biology, and finance as well. But in trading, Fibonacci retracements are a popular technical analysis tool that uses the Fibonacci sequence to identify potential levels of support and resistance. So now we will quickly switch to the platform and check how it works in practice. Okay guys, so we are in a trading view platform. So what you need to remember is that you don't need to worry that the tool will look different in your platform if you are using a different one, because it is a universal tool and everywhere it looks completely the same, exactly the same. So let's go to a blank space and discuss how it looks exactly. So in TradingView, it is on the left side where are the most of the tools. So we have a Fibonacci retracement and trend-based Fibonacci extension. These are the two tools that we are going to talk about today. Firstly, let's use Fibonacci retracement. So we click, we spread it, and as you can see, these are some lines with the numbers on the left. And we need to remind ourselves that the definition is that the number is the sum of two previous numbers. So first we have 0, a nil, then we have 236, 382, and the next one is the sum of the two previous ones. So if we add up 300, maybe let's move it, okay. If we add up 382 plus 236, it is 618. Then we have 1. So if we add up 618 plus 382, it is 1000, but we have a comma over here, so it is 1. We move further, we have 1.618. So basically it is 1 plus 618. Simple. So these are the bases which you should know how the base naked tool looks like. But in trading, you do not only use, while using the Fibonacci tool, you do not only use Fibonacci numbers. So we need to add another levels to this tool, because you will see in a moment that those levels are also well respected by the price movements, and therefore it is advisable for you to add them to your Fibonacci extension tool if you haven't got them already added by default, for example. So let's hit right click, go to settings, and we need to add up 50, 0.5, 78.6 and 88.6 and 1.272. So basically 50 because simply it is a 50% retracement of a movement. 78.6 and 88.6 simply because the price respects those levels. And basically these are not some kind of, numbers taken from the sky, but you will see in a moment that those levels many often are well respected, and from those levels the price many times bounces off and goes in the opposite direction. Those are the levels, for example, respected when a harmonic pattern is being created, but we will not talk about them today. Let's focus on this tool. Okay, so now let's plot the tool on the chart. So the key thing for us is to measure the initial movement. So basically we are measuring here this impulse movement to the upside. Why? Because as you can see from the left side, the price was falling. And basically this was the lowest point in this movement, and from that point the price started moving upwards. And right now we are trying to measure how far it can retrace from that moment. So again, we are clicking on this. You can either measure it from the wick, from the lowest point of the wick, or from the closing price, or for the lowest, from the closing price in this situation. So we click here on the lowest point on the wick, we stretch it to the highest point in this whole move. So basically it is somewhere around here. We stretch it to the right side because we wanna see how the price will how the price will behave. So now we can see basically that the level of 19,210 is the level of 61.8. 50% of the retracement is the level of 20,386-ish. And so basically that is the way to do it. Here you have the 78.6 is 17,500, 88.6 is 16,640-ish. So basically that's how it works, and those are for us the levels of support and resistance. And basically if the price will reach those levels, most likely I will be trying to open a long trade, or here, either here or here, because simply that's how powerful those levels are. And also these are only the basis, because it will depend on the various situations on the market. Right here it is very possible, because for example Bitcoin most likely is creating a head and shoulders pattern, and it would look like a natural thing for the price to retrace to those levels and then start going upwards. So you may ask, how do you know that for example those levels work? Simple thing. We have a situation couple weeks, couple months, in previous year. If we measure from the lowest point, this impulse to the upside, to the highest point, to this week over here, you can see if we stretch it to the right side, 1.272 level is the level from which the price started going upwards. So as you can see, it is a very, very powerful tool, but in order to properly use it, you will have to know other things as well, other types of analysis, in order to, understand where you can use it correctly and when those levels will be well respected. So you can see as well over here, 88.6, one move to the upside, 88.6, another move to the upside, so on and so forth. You can see that when used correctly, this tool can be a very powerful thing to have. So that's the Fibonacci retracement tool. So the next tool is Fibonacci trend-based extension, and this is strictly connected to the AB equals CD pattern, which most likely some of you are familiar with. And this tool is in order to help you to recognize this pattern. So how to use it? It looks basically like this. When you have let's check the blank space, that you need to plot 3 dots, 3 points. First one, second one, and here you have stretched basically the Fibonacci retracement tool. But it helps you to navigate through particular waves on the chart. So still we are on the same chart. So we have this movement to the downside, we have this retracement, and we have the continuation. And so basically, if from that moment the price is retracing on the 618 point, the crucial point which we are talking about, and continue, most likely at this point should be the reversal point. So I'll show you what I'm talking about. We are measuring from the highest point over here to the downside. We have the first retracement, first correction, and as you can see it is at 61.8 level. We measure it to this top, and the number 1 shows us the level from which the price should rebound. And as you can see, guys, it did. Okay, guys, so these are the basis of how to use Fibonacci tools for technical analysis. In order to, master usage of those tools, you will have to also learn wave theory. And therefore, if you will understand how the prices are moving in a cyclical way, therefore it will be easier for you to use those Fibonacci tools, because you will know practically in which places you should plot those tools at the chart. So for now, thank you for watching. As I said, hope you learned something, and of course do watch other of our productions which are right now displaying on the screen for you. So thank you again for watching, wish you all the best, till next time, take care, bye.